Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is January 7, 2019. I cannot believe I'm playing this joint. MC Hammer, pumps in the bump. My man John Hill, man, that guy is hilarious. Shout out to my man John Hill for this one. This is a classic. This definitely brings back memories of the 90s. Those who remember this song, give me some love in the comments below. What's good? Hope you guys are doing well today. Yes, it is Monday, back at it. But I got a breaking news article. Something just came up actually. Ethereum Classic was just hit by a 51% attack. So we're gonna take a look at what's going on with that and see if Ethereum will be able to, well, it's really Ethereum Classic, if Ethereum Classic will be able to survive this. I don't know. About a month or so ago, the main development core team for Ethereum Classic shut down operations. So, I don't know how strong the community is and what they're doing. I haven't really followed up since reporting on that particular incident, but yeah, we're going to read this article and see what's going on. Secondly, out of Bitcoinist, physical Bitcoin futures are coming to Asia in February. So I wanted to highlight this because this will have an impact on the price of Bitcoin, in my opinion, because this is actually physically backed and not just cash settled. So this is the thing about Bitcoin and cryptocurrencies. It's a very fragmented network for price discovery. It's not like your traditional markets where you really only have a handful of exchanges globally where you can trade stocks, and really only one place for most stocks that you can even trade them. So you can trade it on the NYSE, NASDAQ, you know what I mean? Like, there are only certain exchanges where you can trade equities and bonds as well. All that goes through commodities, and bonds for the most part go through the CBOT. So this is different. So when you have something like this being spun up, it is going to have an impact on Bitcoin, in my opinion. Unlike the cash only settled futures contracts that everyone was making a hoopla about, the CBOEs, that really had, first of all, volume was very low. Secondly, they were all cash settled, so there was no direct correlation or demand push or pull on spot price of Bitcoins. But this, in contrary to that, is going to have an impact on the spot of Bitcoin. So we're going to take a look at that article as well. Again, guys, you can sign up for the BitMEX algo, $3.66 a quarter. You get a discount if you sign up for longer periods of time. So you get a nice discount for 6 months, and even better discount, almost 50% discount if you sign up for 12 months. So check it out. Again, I've told you this before. If you click the real-time results, view that, you can kind of see where we are on Trading View. You'll be able to see exactly, if you scroll all the way down, you'll be able to see the performance of this algorithm since beginning of 2018. So looking very good, 309%. You can go through summary of all statistics and also see all lists of trades that have taken place. So past performance is not indicative of future results. However, it does give you some baseline to go off of. So check it out if you guys are interested. I'll leave a link to that in the comments below. Let's go ahead and take a look at that market cap. We're currently at 136. Bitcoin's dominance is 51%. It's dropped drastically. We were as high as hovering around 55%. So the altcoins have been seeing a surge in price. And again, if you take a look at this trend line, we are trending right off of that all the way up. Took a small pullback at 137 billion, but the next target is taking out that 145 market cap price. So let's see if we can do that. We did take a small pullback from the explosion up, but if you look here, this should now be a area of support. And also, if I extend this trend line that we been tracking for quite some time now, if I extend this outward, you will see this perfectly lines up. It's crazy. This is all you need, people. I'm trying to tell you. All you need are trend lines drawn properly, though. You do have to draw them properly for them to work for you. So I extend that trend line out and boom, look, we bounce right off of that. So let's see if we can hold that trend line. If not, this 39 area should be an area of support for us. So on to that first article, the breaking news that I wanted to get to you right away. Ethereum Classic hit by a 51% attack. It says here details are sketchy, but the network has asked exchanges and mining pools to up confirmation times on transactions. Bitfly, which operates the Etherchain Explorer and Ethernodes Explorers, as well as ETC mining pool, has confirmed that the Ethereum Classic network has been hit with a 51% attack, with at least 51% of the network's hash power. An attacker is able to put their own chain on the network and reorganize the blockchain. There are multiple malicious strategies available to a person or persons with 51% of the network's hash power, double spending being one of them. CoinNest, an apparently China-based coin journal that claims funding from Huobi Global, first reported late on January 6th that SlowMist, a block security company also in China, had warned that the Ethereum Classic network might be experiencing a 51% attack. Through its Twitter account, Ethereum Classic pointed to the Block Scout Block Explorer and responded, "From what we can tell, the ETC network is operating normally." They said in a tweet here, "There have been rumors of a possible chain reorganization or double spend attack. From what we can tell, the ETC network is operating normally." Then a few hours later, the ETC network began seeing things differently. It asked all exchanges and mining pools, please allow significantly higher confirmation times on withdrawals and deposits. And so here's what they say here: to all exchanges and mining pools, please allow a significantly higher confirmation time on withdrawals and deposits. And actually went on a few exchanges and they wouldn't even let me create a new ETC wallet address or do any deposits or withdrawals either. So I did check that. Shortly after that, without confirming the attack had indeed taken place, it retweeted a CoinNest article citing exclusive information from SlowMist that a private mining pool had seized 51% of the network's hash power. The address at the root of the speculation, which began with this one listed in the article, has been mostly silent for the last 12 hours after it mined block 7,256,171. Bitfly says it has increased block confirmations on its Ethereum Classic mining pool due to the reorg attack. Kraken also announced it had increased confirmations for ETC deposits on its exchanges from 120 to 500, meaning it will take nearly 2 hours for Ethereum Classic transactions to be confirmed. What do you guys feel about this, man? This is not a good look, especially for it was a decent size cryptocurrency. So to see a 51% attack happen, and we know what happened a few months ago where the main dev team shut down shop. Do you guys, this is my question to you, do you feel like it's over for Ethereum Classic? This is definitely not looking good, people. This is definitely not looking good. Let me know your comments about that in the section below. The second article out of Bitcoin is physical Bitcoin futures are coming to Asia first in February. CoinFlex plans to debut physically settled Bitcoin futures to the Asian market beginning in February of this year. The platform is a consortium of participants such as Roger Ver, B2C2 Trading Technologies, and Alameda Research, among others. It says, according to Bloomberg, CoinFlex plans to offer futures contracts for Bitcoin, Bitcoin Cash, and Ethereum. Like Bakkt, owned by International Exchange, CoinFlex's offerings are physically backed contracts. According to CoinFlex CEO Mark Lamb, settling futures contracts in the underlying cryptocurrency asset improves trust. Speaking to Bloomberg on the prospects of cryptocurrency futures trading, that is very true. He says here, crypto derivatives could become an order of magnitude larger than spot markets and the main thing that's holding back the growth is a lack of physical delivery. Volumes are reduced because of the problem of trust when it comes to cash settled trades. For LAMB, there's a great potential for expansion within the cryptocurrency futures market. According to the CoinFlex CEO, the cryptocurrency futures arena should be able to grow to 20 times the size of spot trading markets, as is the case with other asset classes. Presently, both markets handle approximately the same volume on daily transaction. One unique detail on the CoinFlex offering is that the contracts will trade against Tether USD, the most popular stablecoin, which is pegged against the US dollar. Apart from Tether, CoinFlex also plans to launch a contract that will trade opposite Circle's USD coin, another stablecoin. At the expiration of the contract, traders who hold long positions will receive Bitcoin, Ethereum, or Bitcoin Cash, while traders who hold short positions will receive USDT, depending on the performance of the contract. Despite offering physically delivered Bitcoin futures, CoinFlex will not come in direct competition with a platform like Bakkt. The reason for this is because it is incorporated offshore, allowing the platform to offer its products to a more global market, except for highly regulated markets like the US and the UK. When pressed about competition from the likes of Bakkt, CME, and CBOE, LAMB highlighted the fact that the US-based crypto Bitcoin futures trading accounts for only a tiny portion of the market. Most of the global Bitcoin futures trading takes place in the offshore and in Asia theater. The primary reason for this disparity stems from the fact that markets like the US remain highly regulated. Thus, US-based futures exchanges cannot compete with the reach of their counterparts based offshore or in Asia. With focus on the Asian market, the platform will also be eyeing a move to compete with BitMEX, which has a sizable presence in the region. Where the latter offers leverage of up to 100 times on specific contracts, CoinFlex caps its offering at a leverage of 20 times. Excellent. That's pretty good news for those who, I think it's good to see competition in the space when it comes to leverage and futures contracts. And in my system, my trading algorithm, we do 20x anyway, no more than that. There's no need to go any higher than 20x unless you plan on blowing your accounts out. It's just that simple, in my opinion. You're gambling. Anything above 20, 50x, it's just a pure gamble if you're using all of that leverage or margin. So yeah, this is good, man. And I'm glad to see them actually settling in the physical asset. We're waiting for Bakkt and all of that. You don't have to wait for Bakkt, because again, this is a fragmented network of exchanges, and it always will be, in my opinion. You may have the US and UK try to corner a decent amount of volume, but they will never be able to hold the same amount of volume that your traditional markets and corner the market, I should say, like the traditional exchanges that we have currently with equities and bonds and commodities. So this is good, man, and this will definitely impact the price of Bitcoin, Ethereum, and Bitcoin Cash. Good or bad, I don't know. It's gonna depend, but that definitely will be a good market to make money in, and it actually will create some price stability. Believe it or not, futures actually do that in the long run. So you guys let me know, do you think this physical Bitcoin futures market launching in Asia is going to be a major competitor to Bakkt? And it just shows you, like, even the guy here says the US is just so bombarded with regulation that's why we're slipping behind year after year in every category. It just makes no sense. So again, that's it for today, guys. Let me know your thoughts about both of these articles that I covered today. Shout out to my man again, John Hill, for the song request. And that's my 2 Satoshis for January 7th, 2019. I'm out of here, people. Holla!